All right, what's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. Today, we're going to be taking a look at the S&P Homebuilders Index Exchange Traded Fund. It's a fund that trades like a stock, and it's made up of the major home builders that are publicly traded in the United States. So what we're going to do in today's session, as usual, we're only going to be looking for two things. One, what's the direction of the trend? And two, are there key support and resistance levels that we can use for either a quick bounce trade or for a lower entry price for a longer term position in anticipation at some point of the home builders in the US, the stocks at least, rebounding and heading to approach new highs or maybe to hit new highs. All right, so what we're going to do first is assess the trend. And all we're going to do is look for the two most recent highs and two most recent lows. So you have a high, you will have a lower high, we have a low, we have a lower low. A series of lower highs and lower lows is the definition of a downtrend. So the Home Builders Exchange Traded Fund Index, XHB, is definitely in at least a short-term downtrend, okay? So we are in a short-term to intermediate-term downtrend. I mean, we've been downtrending since call it the early part of September, okay? So what we're going to do next is we're going to be looking for support and resistance levels. Let's go find a support level first. And our first, on the weekly basis, I can go find a closer one on the daily if you want to get more aggressive. But I'm going to be a little more conservative given the nature of the market over the last week or two. So our first key support level on the weekly time frame is between 95.54 and 91.52. So that's about, we're sitting around $100 a share right now. So that's about $4.5, $5 away from entry price. Now I'm not going to change the time frame for a faster entry, but if we did change the time frame to daily, there would be a quicker trade. Once again, I'm being a little more conservative in today's chart exercise. So let's go find another support level in case things really start to get rocky in the home building business. There's our next support level on the weekly time frame isn't till all the way down here. That'd be right at this breakout point between 84.05 and 80.16. And when I say breakout point, notice how we had this high, we had a low, we broke out into an uptrend. That's going quite a ways back. We broke out into an uptrend, and that is the breakout point. And notice, let me draw this little circle there. Notice how we bounced right off of that breakout point. So there's your breakout point. There's a support level. Bounced right off of it. That was during the tariff tantrum sell-off earlier this year. All right, so I'm going to remove that. We got two support levels to consider. If things get really rocky here, I'll just draw this in case things get really kind of sketchy in the market, or you're looking for a real big sell-off. The start of that uptrend was all the way down here in the 70.26 to 67.90 range. So three support levels to consider. A couple of them are pretty far away, so don't need to spend a whole lot of time on them if you're looking to do a quicker trade. We could get here, we could approach this level quickly. We may not get there. Okay, we may just reverse. Maybe there's a Trump tweet talking about 100-year mortgages. I don't know, but or maybe there's a big stimulus program, but some way to cut interest rates. I'm not going to get into the fundamental reasons why this might bounce. All I'm looking for is clues in the chart. And on the weekly, these are the only clues we have to work with for support levels. So there's three support levels to consider. Now let's go find a resistance level or two. And there is a small resistance level right here in the 108 to 110 price range. So we dropped, went sideways, and continued to drop. And that's actually a level on top of a level. So I'll combine those two levels there. And then above that, there is a resistance level right here at the highs of last year. Okay, so two resistance levels, three support levels. And if you wanted to trade, this is not financial advice. This is simply a tutorial, technical analysis tutorial. Okay, but if so, I'll walk through how to construct a trade based on support levels. Once again, we're in a downtrend. Okay, so generally I like to buy at the start of an uptrend, a pull back into a support level. So this is a little more dangerous in my view. I would be much more inclined to wait to see if we get a W bottom and maybe the start of an uptrend. So maybe we do another one of these videos here in a few weeks or a few months where that may play out. But in the meantime, if you're looking for a bounce, even in a downtrend, you can get tradable bounces in a downtrend. Okay, I'm not saying you can't do it. I'm just saying I prefer to be in an uptrend looking for my bounces off support levels. But if you're trying to buy this sell-off here in the XHB while it's dropping, and you like the support level here, the way to construct that trade would be to place a buy limit order at the top of the support level, protective stop just below the support level, target just in front of the first resistance level for a conservative target. If you don't think that that's much of a resistance level, you think we can get back up near the all-time highs, then you can drag your target up to there. Or maybe you don't use a target at all, you just use a trailing stop. But if you're trading rapidly, the best way to technically to set a target is to set your target where there's a clue that there were sellers, enough sellers to take the price down, okay? Or to cause the last reversal. So the last reversal in the chart here, we started to rise, we got knocked back down. So that's why I'm putting the target right there. And that trade set up right there as a 2.69 to 1 reward to risk ratio, which isn't going to make anyone rich, but if you do that enough times and your win rate is, let's call it your win rate 50%. Let's just say you're right 50% of the time, your average win is 2.69 and your average loss is 1. Over time, do enough trades, and that's the formula for building your account. So ideally, this trade would play out something like this. You'd want it to continue to drop, bounce off that level, get a bid, and head back up towards that resistance level. There's your real quick rapid fire 2.6 to 1 reward to risk trade. If it were to play out like that, that would be how it would ideally play. Now, once again, if we continue to head lower and break through that, you don't want to be waiting and just go hoping and praying we're going to bounce at some point. You're a trader, right? If you're a long-term investor, you can buy and hold. But if you're a trader, if your zone doesn't work, you want to get stopped out. You don't want to be sitting on big losses, okay? So our protective stop would just be just below that support level. Once again, target the first resistance level. So let's wrap up the session. Hope you enjoyed the session. If you're new to trading, hope you learned something. I'll be back with more technical analysis later this week. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.